Hello everybody. Today we're going to try and do something a little bit different to the ordinary, and we're going to try and answer some of the frequent questions that would come our way in the hope to be able to share some information that might be of particular interest to the broader audience. Under normal circumstances we would be answering these directly to a person, and we'd have a lot more background to that person so we can make it more relevant. But here goes, we'll try and cover off as much as we can. So the first question would be, is it smart to use savings and investments plan to save for a mortgage deposit? The truth is, dependent on the time frame before you intend to purchase a property. So I guess whether you should use a savings policy would depend on how much you've already accumulated. What is the time frame before you want to purchase? Because if you don't have at least 3 years, the reality is you would be better off just keeping the cash in the bank, because if you go into a savings policy, you're entering into like a time restricted product. So if you decide to take your cash reserves or the full savings value out of the savings policy, you're subjecting yourself to exit penalties. Now, if you know you're going to be purchasing a house within that 3-year period, it would make no sense to enter into a policy already knowing that. Another question that we have here, if an employer doesn't offer a pension, what should I do? And this particular person was in their 20s. There's never a bad time to start for pension savings. Obviously, in your 20s, your retirement is a long way away. So, in that instance, it will be so much better to save smaller amounts frequently. So again, you're building up. For somebody who's like in their 50s or late 50s, in their scenario, they should be obviously contributing as much as their disposable income can allow them, because again, the more they can accumulate, they're closer to retirement age, so they would have access to it much, much sooner. What should I do with my pension when switching jobs? This is something that comes up frequently. If you have a pension pot that would have, we'll say, a value of 50,000 or above, it's always going to be worth your while to consider transferring that into your own personal arrangement, because you'd have a lot more control over it. The charges that would be associated with such a policy can be spread over the term of the pension policy. If it's under 50,000, it's very difficult to make it cost effective, because in these group schemes, more often than not, the majority of the costs are covered by the company themselves. So again, it's much better to remain in that scheme. What is the best way to save for college for my kids? Again, the only way to do that, the most effective way to do it, would be through a long-term savings plan. Long-term being, 7-year plus. That gives your monthly premiums the opportunity to have, the compound growth advantage. And over time, your savings will continue to grow. So by the end, and within the time frame that you need it, you would have saved considerably, but also had the massive advantage of the compound growth over the duration of the policy. Is it smart for most people to take a tax-free lump sum at retirement? The answer to this is very simple. Yes, absolutely. There's no reason why you shouldn't take your tax-free lump sum, because you'll never get another opportunity to obtain a tax-free amount without some kind of charges to it. So unless you're in very unusual circumstances, you would always be trying to take your tax-free lump sum. The last one I'm going to answer today, because I don't want to rant on it too much, is how do you claim back claim back tax relief on pension contributions? So basically this is all done through your tax code. So if you're in an occupational scheme or a company scheme, then it will automatically be deducted through your payroll. If you're entering or you've started a new personal pension, in that instance, then you literally need to register the pension plan through your online revenue account. And again, it would be something that's applied directly at source through your tax code. So I hope these questions have been of some kind of benefit. If there's anything else in particular that you'd like answered, by all means do email us or drop us a line on the website or on the Facebook account. The website's oaktreefinancial.ie, or feel free to call us on 025 305 88. Thank you very much and take care. Bye now.